Good morning, everybody. How's everybody doing? We have Tom Russo and Delham with Encompass Mortgage to talk with you and give you some info on reverse mortgage purchases today. So I'm going to go ahead and let them just go ahead and take it away and get started. Please feel free to raise your hand, chat in any questions about the reverse mortgage purchase or anything that you're seeing. If they don't get to them right away, they will definitely get to them throughout the presentation and definitely in the end. So ask any questions that you want and we will get you some great information. So guys, go take it away.
How do we set up the PowerPoint to start?
So we'll start off sharing your screen. And we'll just share the PowerPoint. There you go.
Okay. Well, welcome everybody who's here. My name is Tom Russo, and this is my partner, Delham. I only see one familiar face who's had this training before, so that's great. Everybody else, it may be a first time. Is there anybody else who I've personally trained? I know I've been training you guys for over 6 years in this office. Other than Phil, anybody else that has seen this training before? Okay, great. Oh, you're not in the room. Bob's raising his hand from the back. So Del and I are going to kind of tag in and tag out today and kind of do a WWE presentation as it pertains to to this. No, yeah, we will not slam anybody down. And no question is a dumb question. So what we're going to do is our darndest here to give you guys some good information to help you sell more homes. So we're going to get started, and hopefully 2 people have entered the waiting room. So should I let these people in, Chris? Okay. All right. Okay, there they go. Okay, so we'll keep an eye for people who come in. All right, so Del, since you did this, okay, there we go. All right, so let me take this off the screen here so I can see everything. So today's goal is to help you make more money in real estate. So if you came here expecting a bunch of guidelines and boring mortgage stuff, you're going to be disappointed. If you came here hoping to learn something that you literally can use starting immediately to make more money, that's the goal. For those of you who know how to use Remind, I'm saying it correct, Remind, right? This is a literal gold mine. So for people who really are anxious to make money, you can use Remind and the stuff that Del and I are going to teach you today to make a lot of money. I often joke about becoming a realtor because with my knowledge of this, if I knew your side of things, I have no trouble. Oh, stay closer to the mic. Thank you.
You're good where you're at. Just if you turn that way.
Gotcha. With my knowledge of this, the senior market, and if I could actually be a realtor, you guys would all be in trouble. I would get a lot of business. So our hope is not to make you loan officers, but to teach you things today. This is about marketing. We promise not to bore you with guidelines, okay? That's our problem. So options equals power. We're going to give you guys more options today. And Del and I work out of this office. We've been here 14 months, 15 months, something like that. So we sit on the other side of the building and we're here a couple days a week. And we've been really fortunate to work here for the last 15 months. And we want to thank all of you who have already given us your business on the loan side. So thank you in advance for that. So now let's see if I can figure out how to move this PowerPoint forward. Okay, I did. Just have to remember which slides are mine. So these are the things we're going to cover today. The market for this product. If you don't already know, we probably have a few seniors in this area. So this might work for them. What a HECM for purchase is. I can tell you I've been teaching this for a long time. I ask realtors, what is a reverse mortgage purchase? None of them know. And the ones that tell me they do know, they don't. Because I just need a follow-up question or two, and and I find out they don't have any idea how to use this. Okay. The misconceptions about the HECM mortgage products. HECM stands for home equity conversion mortgage. You're going to see that in a future slide, but just in case you're curious now, we're going to help your buyers to maximize their purchases. We're going to show you how to make a lot more money. We're actually going to show you how to use the HECM or reverse mortgage. Same thing. Again, we'll have a slide on that to sell more homes and actually to get more listings. We've got some crazy animations. We had a few problems with the animation, so we apologize for that. So we're going to, once in a while, you see a crazy thing on the screen, but we'll get through it all. And we're also going to talk about multifamily use and to subsidize retirement. We're going to talk to you about that. There's all kinds of strategies that we've developed to help you make more money. That's the bottom line. We want to help you make more money. If we do, you guys will like us. And we like for realtors to like the mortgage guy. So we're also going to talk about the refinance option. Most people, when you talk about reverse mortgages, the first thing they think about is a refinance. What do I need to know about a reverse mortgage as a realtor? Well, you're going to know in the next 40 minutes why you need to know. So we're only going to mention the refinance option so you know it exists. And besides, that's what everybody thinks we're going to talk about. And in fact, it's not. Okay. This may be the most important slide on here, the guy with the funny face. Okay. People, since I've taught this and I've worked with realtors, once they mention an option of a reverse mortgage purchase to their buyer, you might as well put devil horns on your head because your buyer is going to look at you like you are the devil incarnate. Okay. Some of you have mentioned it to them. So I'd like to address this right up front. This is what's going to happen. They're going to look at you with almost utter shock. Like, I cannot believe you just told me to get a reverse mortgage. Okay. If I was presenting it to the buyer, I'd have them overcome those objections in seconds, and they'd be looking at a more expensive house with me. Okay. And that's what you guys are going to learn today is how to take somebody with a $200,000 or $300,000 cash budget and put them into something that they would love for $500,000 or $600,000. Since we all get paid on a commission or percentage basis, that's not a bad thing. So you don't have to know anything other than how to send somebody to an online presentation. Dell and I have put together a special link for Century 21 agents. You will drive somebody to this presentation. Again, we're going to show you everything today. But if you get overwhelmed with this and you go, oh my gosh, there's so much stuff to absorb, all you need to remember is how to send them to the presentation. And you also have that link. Okay. So when I tell you we have done everything, all you have to do is put the buyer in front of this information and you will make more money. So hopefully that's going to be helpful for you. So this is a slide we did a long time ago. Is there a market? If I,
this is an update.
oh, it's an update.
Yeah.
You pulled an update.
Yeah.
Of course you did. I did this slide. I did this presentation about 2 or 3 years ago, and I asked Dell to update it. And when Dell does something, everything's done perfect. So of course he went and got an update. So I guess it looks like Florida is #1 with a net migration of 84,000. Is that families or retirees? Dell?
That I don't know.
It's a lot more people than 84,000.
There's more people.
Yeah.
A lot of people.
But you guys all know that we're the #1 state at this point in terms of people coming here. Don't need to talk too much about that slide. Okay. Anybody no different than that? Okay. I don't think anybody else logged in here. Okay. So there's 2 ways to use a reverse mortgage, refinance and purchase. We won't talk to you about refinances today other than that they exist. Okay. What is a reverse mortgage purchase or a HECM for purchase? Same thing. HECM, home equity conversion mortgage. That was the original name that was created for this. Now, this is really important. Non-recourse loan. The only recourse is against the property, not the borrowers or their heirs, because one of the fears that people have with a reverse mortgage is, oh my gosh, my loan amount's going to go so high, I'm going to be underwater. My kids are going to get left holding the bag. Doesn't happen. Okay. It doesn't happen. We'll talk more about that, but it's a non-recourse loan. Okay. Non-recourse means the only recourse for the lender is against the property, not the buyer. Okay. That's what a non-recourse loan is. Okay. It's a loan that does not require a principal and interest payment. Notice the word require. Why is that there? Some people want to make a payment. They don't want that loan balance to grow. Maybe they don't want it to grow from age 62 to 65 when they fully retire. And maybe they're working at age 62 and they can afford to make a mortgage payment. That's okay. And at age 65, when they fully retire, they stop making mortgage payments. Very flexible from that perspective. Now, this is a really new line item here. For those of you who've seen this, like Phil, it's a loan that allows those 55 and above to own a home and live there. Notice what it says, as long as they wish. People say, well, how long can you live in the home? Does the lender kick you out? No, they don't kick you out. It's your house. Okay. So 55 and above. Why is that significant? Because if you saw me do this 2 years ago, you would have heard 62. Now it's 55. Okay. So even people like me can get a reverse mortgage. So those of you who don't think I'm over 55, I am. All right. Dell will tell you, he's my brother-in-law. He knows. Now, what's important is that the buyer knows, and this is our job, not yours, that they have to pay their property taxes, their homeowner's insurance, and any applicable fees. I've been doing this going on 7 years with reverse mortgages, 18 for regular mortgages. I've never had anybody get foreclosed on or any of those bad things that people heard. Why? Because I tell people, pay your taxes, pay your insurance, pay your HOA dues, everything will be fine. And everything is fine 7 years later. Okay. So qualifications, as we mentioned, seniors, 55 plus. If it's a married couple, only one of the two have to be 55. Okay. I can make some jokes about that because I've seen some really interesting couples come through, 74-year-old guys with 50-year-old wives and stuff like that. But we'll hold that for another day. There's no minimum credit score. Okay. A lot of loans have minimum credit score. This one doesn't. Less qualifying paperwork. Single family residence, some condo options now exist. If you heard me do this 2 or 3 years ago, the C word was a bad word. Condos, no luck. Kings Point is still out. In case anybody's mind is running to Kings Point, still out. Okay. There's issues with Kings Point. Can't do them in there yet. One of the issues is all leasehold. I think there's 8 HOAs in there or something that the people own the land underneath, something like that. Those are fair game. Okay. Townhomes, multifamily homes are included. So single family residence, townhomes, multifamily homes, and some condos. Working with a lady right now is condominium. We got her approved. It's not an FHA spot approval. For those of you who know what that is, it's just a regular lender approval. They take their money and they lend it because it's a condo. Sad part is her hot water heater was up in the attic and it blew up right in the middle of the process. So needless to say, let's slow things down. This is only for your primary home, for a buyer's primary home. And I'm not doing a good job with the mic.
You're okay. I'm just going to see if we can keep it better because you have a tendency to move that way.
Okay. All right. So primary homes. Here's some general information. It's all the same product. If you hear Dell or me use the word HECM, home equity conversion mortgage, reverse mortgage purchase, HECM for purchase, H for P. Those are all synonymous terms. Okay. And now Dell is going to talk to you about the facts versus the perceptions that so many people have about a reverse mortgage.
Thank you, Tom. So there are a lot of facts and myths, and you're going to see, this is one of those set of slides that got a little wacky, but anyway, we got fact and myth, and we got perceived cons. I got my fact arrow to the left, but anyway, so these are perceived problems. Is it's a more expensive loan. The pro side of this is it's providing insurance against market declines and protect the seniors. As Tom mentioned before, as if the product, if later on the mortgage amount goes up and there would be an underwater situation, this product is guarding against that. So as Tom mentioned, those borrowers, those buyers are not do not have to pay for that market decline.
Let me clarify that. What Dell is saying, I speak real loud because this is one of those tricky things. Okay. If people are underwater, what he means is if the loan amount is higher than the market value, or if the market value precipitously drops. I know that's exactly what's not happening today, but it doesn't mean it can't. We could have some type
Dow Jones Industrial Average is up at the
the
moment.
Dow Jones Industrial Average is up.
I'm trying to shut this phone off.
160.
Okay, that's good. The Dow is up. But what's important, because so many people are afraid that their loan amount is going to be exceeding their market value, and it could happen. I know that the market's hot, but that's what Dell is addressing when he talks about it being underwater. Okay, so I want everybody to understand that, because it's a real important thing to know. It's okay if you owe, come on in. It's okay. Welcome. If you owe more than your house is worth, you're covered. You're protected. The senior is protected.
Okay. So related to that, there you could have equity line declines due to negative amortization. Well, in the meanwhile, while that senior is the amortization, the negative amortization is going up, while the cost, their loan amount is going up, Their standard of living is also going up because the price of homes in general, like even over time, even though there are down times, over time it goes up. And the other thing that they have is they're putting money in the bank. You know, they're theoretically banking some of the money that they would otherwise be putting towards a mortgage. So they are preserving their capital also. Like, there are a lot of reasons to preserve capital, and each of us has different reasons, but that is something that's real important, like for retirement needs, long-term care, life insurance, etc. And there are no mortgage payments. One misconception is the bank retains the title. Well, that's false. You retain the title just like any other mortgage, just like any other loan. And you can, some people think that you can get foreclosed upon. No, as we mentioned before, this is protecting you, protecting the buyer from getting foreclosed upon. So again, as Tom mentioned, all you have to do is pay your taxes, HOA and condo dues, flood, but just like every other loan. Another misconception is that you lose all your equity when you sell your home. That's false. Any equity is yours, and yours at the time of sale. Yours meaning your buyers. So they don't lose that equity. It's always theirs. If they decide 5 years down the road they want to sell their house for whatever reason, whatever equity is in there is still theirs, or their heirs for that matter. And you can't sell when you want to is another misconception. Well, that's also false. Again, works like any other loan. They can sell whenever they want to. There's no prepayment penalties or other special considerations. You are heirs, or your heirs will owe the bank if your home is upside down. Well, that's false. One of the reasons the reverse mortgage is more expensive is that insurance aspect, so that they are covering the loan if for any reason the value would go below. And lastly, the mortgage insurance is prohibitive. As you can see, that's false. You look at FHA, the upfront mortgage is 1.75 and the annual rate is 0.8%, and the VA is 1.4 to 3.6% with no annual, and the HECM is upfront 2% and annual 0.5. So it's in line with many of the other government mortgages. All right, I will turn this back to Tom.
I have a question.
Oh, yes.
So I know a little bit about this.
Okay.
You put down 50% of the cost of the house. They'll have to pay mortgage insurance.
It's the insurance is rolled into the loan amount. In other words, you're not paying the mortgage insurance, but that is something. Okay, so a standard mortgage, you pay for principal and you pay for insurance. And as you pay for principal, the amount of the principal payment in amount of your mortgage payment is higher than the mortgage than the interest for that month.
I think the question is, do you pay mortgage insurance? There's two different types of mortgage insurance. One is 2% of the appraised value of the house at closing, and one is 0.5% a year. That is accrued. Okay, so it's like private mortgage insurance. Everybody knows what private mortgage insurance is. Well, they have 0.5% a year, which is your private mortgage insurance for a reverse mortgage. Okay.
But if you're putting down 50%, why do you have to pay that?
It's very simple, because the loan is insured. Like Dell was saying, the loan is insured. So what would happen is if you had a home and the value dropped, or you lived a lot longer than the actuarial tables would indicate you should, okay, because everything is done on actuarial tables when it comes to reverse mortgages or life insurance for that matter, okay, that 0.5% per year that's being accrued, not paid. You never pay anything at your taxes, your real estate taxes, okay, homeowners insurance, your flood, that kind of stuff. That is the private mortgage insurance. It's no different than FHA loan. That mortgage insurance never goes away on an FHA loan. Okay, so it's no different. It's a form of mortgage insurance that doesn't go away, just like FHA. Okay, so yes, you do pay it even though you put 50% down. Even if you put 20% down on an FHA loan, you still have mortgage insurance because it's an FHA government loan. So it's the same thing with a HECM for purchase. I should be closer to the mic. Okay.
We're still okay. Just when questions come up, try to repeat that.
Thank you.
Yeah.
Will do.
Thank you.
Did that answer the question? No?
Yeah,
You sure?
well, I don't pay mortgage.
Correct. You have a mortgage?
Oh,
Okay. So you make a mortgage payment
I
monthly.
put down 75% of the cost of my house when I bought the house.
Okay.
Why didn't I have to pay mortgage?
Correct. And that's fine.
But
And,
with
and
this, you have to pay 0.5%.
you
every
accrue
year.
0.5% per year. And I keep using the word accrue
Right.
because I want to make sure everybody knows you don't write a check.
Right.
Okay. But yes, just like an FHA loan, if you put down 25% on an FHA loan today, you still have mortgage insurance. It's terrible, but it's the government in action.
Is it due to any risk related to the reverse mortgage compared to another loan?
Is it due to risk? Technically, everything is risk when it comes to mortgage insurance or PMI or any insurance is always a risk factor. So the risk is, will the senior live till 100 and that house be technically underwater in terms of them owing more than the house is worth? That's the risk factor. Or if the market drops off a cliff, which we have seen, I know it's not what we're seeing today, it could also be the case. So that's why there's mortgage insurance. Any other questions? Yes. Well, part of the rules. Oh, okay. So the question is the mortgage insurance to protect somebody from tearing up their place? Yeah. Right. Well, part of the rules of reverse mortgages is to keep the house in good repair. Nobody comes and checks, but that is just something that is just standard. And like I said, I've been doing this for a long time. I've never had one issue with anybody not taking care of their home. Most people are good people. You just have a few outliers that don't do what they're supposed to. Any other questions before we move on to the good stuff that you guys came here to see? This is the stuff that, we don't like to present it, but we need you to know this is where if somebody came to me and I was in an open house and I told them about this and they say, oh, it's an expensive loan, I have the answer. Okay. Oh, well, I can't, you can't sell your house when you have a reverse mortgage. Yes, you can. You can sell it the next day after closing, of course, and it records. So these are the things I can rattle off like this. It's kind of a boring slide, not the fun one. We're going to get to the fun ones.
You're starting the fun ones.
I know. I
So
get to
you
start the fun ones. Okay. Seniors pay cash. Anybody argue with that? The majority of seniors pay cash? No? Good. So we don't argue it. We think from our experience that most seniors pay cash. Why do they do that? Well, they don't want a mortgage payment. There's other reasons why they pay cash. They're on fixed incomes. They don't know what they can afford. Is that fair? And they might have alternative investments that are lucrative. I had a guy tell me, hey, I'm doing this mortgage. I've got $1 million in my 401k, his IRA or whatever it was, $1 million. He was getting 10% a year. So he says, how much is the interest rate on your HECM? The time was 2.5%. So he says, 2.5%, 10%. Why would I spend my 10% money when I can use your 2.5% money? So there's a lot of reasons people do this. It's not always out of, hey, I don't have the money. Sometimes they just want their money to work for them. Okay. This guy, I like what Dell did here. Perhaps he's spending his children's inheritance. Is that what you're going to do? That's my niece.
Working on it now.
Oh, you're already working on it. That's my niece and nephew that he's going to be spending their inheritance. They're both doing well. Okay. So now this is what you guys came to see. How do I make more money with this? We bored you with some upfront information. We apologize. It was a necessary evil. All right. Scenario. A cash buyer comes to you with $250,000. They want a 1,600 square foot house with a pool or a lake. How many of you can find a cash buyer a home for $250,000 about this size with a pool or a lake? Anybody? Because if you can, I'd like to work with you. No, nobody. Okay, I didn't think so. All right. The issue here is what the buyer wants and what they think they can get for $250,000 doesn't exist. You know that, and I know that, even as a mortgage person. So how do we solve this issue? Again, we're talking about senior buyers. Senior buyers are defined as what age? Anybody? 55. Good people are listening. This is good. Okay. So here's where I could make a lot of money with this loan, and I'm hoping to help you do this. Remember, the only thing you have to do after this presentation is be able to point somebody to a video. We did all the work for you already, and we'll do all the question answering. Okay. So Dell comes to me and he says, hey, I've got $250,000, Tom. I hear you're a good real estate agent. I want to buy this house. So what I'm going to turn to Dell and say, Dell, the home you want is probably somewhere between 430 and 450. Again, you guys know your market. Dell, if I could show you a way to just take that $250,000, because he's over 62, believe it or not. Okay. $250,000. We could take that 250 and get you the home you really want with no mortgage payment. Would you be interested in seeing that home? What do you think he's going to say? He's going to say yes. If he doesn't, my sister will, because my sister is who he's married to. My sister's going to say, yeah, show me the house. Okay. So I'm going to get Dell in that house. And when my sister sees that house, his wife, okay, what do you think is going to happen? They're going to like the house. It's a beautiful house. And now all of a sudden, I took Dell from a $250,000 cash purchase. I put him in a $400,000 plus house. And do you guys get paid on the 250 or the 450? I think it's the higher number, right? It's going to make Chris happy and Craig happy, and everyone's going to be happy, okay? Including the borrower, the buyer who got to move into a $400,000 home. And what is their mortgage payment, principal, and interest? Anybody? 0. Okay. So this is how we take a cash buyer with this budget and we show them a house that fits their cash budget with no mortgage payment. Yes, they could take the 250 and put it down on a regular loan. And if they do that, Dell and I can do that too. What are they going to have after that? A mortgage payment. That's assuming they even qualify on their fixed income. Okay. So this is how you take a cash buyer and increase your paycheck. Everybody see that? We're going to have more slides on it. Don't worry. So for those of you who like math, I know most people don't, Dell and I do. Okay. Here's the math. 250 down, 180,000 H for P, HECM for purchase or reverse mortgage. And there's your $430,000 home. People get so confused on this slide. Make believe the 180 is a regular loan. You put 250 down on a house, Phil, you have another $80,000 loan. The only difference is that $180,000 loan is not a conventional loan. It's not an FHA loan. It's not a VA loan. It's a reverse mortgage. Because it's a reverse mortgage, Phil has no mortgage payments. It's that simple. It's not rocket science. I couldn't do it if it was rocket science. Dell probably could. Okay.
By the way, we are using a 60% factor. That could be less depending on your borrowers, but that 60% is just making it a little bit easier for us to present to you. But there are options where it could be less.
Yes. Thank you, Dell. So we use a 60% down factor. Now, that includes the closing costs, but Dell is absolutely right. Depending on the program, depending on the age, I've done this for as little as 42% down for people. So imagine a 42% down payment on a $400,000 home, and they never make a mortgage payment. Age and the program they choose. That's it. So the older you are, the better.
And age of the spouse.
The age of the youngest spouse, but that's age, right? Yeah. So for those guys who married, much younger, they're gonna pay the price now. Okay. So we won't go anywhere else with that one. But so the math, again, like Dell said, we just use a 60% factor, includes the closing costs. It's closer to 50%. It's where it is right now, 50 to 55%. But if you just think in your head, 60% is what they need down, you'll be fine. And we're going to show you something again, and you'll be able to have access to this. We'll give it to everybody. And we're going to show you a slide that's going to help you here. We tried to think of everything to help you. Okay. That's still my slide, right, Dale?
Yes.
Okay, good. All right. So this slide here is for those people who don't like math. All right. Dell and I like math. All right. So I've done this before, and of course, everybody's kind of gets a little leery. So we're going to have a little fun. Sandwiches and stuff is not here yet. Everybody take out your cell phone, because I know everybody has your cell phone. This is a group participation. And for those of you online, Chris is watching. All right. Make sure you take out your cell phone to do this. We're going to check Dell's math, which was my math. 200,000 is my amount of cash in my hand. Okay. That's how much cash I have. I came to any one of you. I've got $200,000. I want to buy a house. First thing I want you to think about is how much can these people closer to the mic. Thank you. I'm glad I got people watching me. $200,000. How much could they afford if they're over 55? The answer is you divide, not multiply, you divide. And the answer's up there for those of you who are a little squeamish about it. Divide by 0.6. Your $200,000 cash buyer just became a $333,000 buyer. Everybody see that? You divide by 0.6, not multiply by 0.6, because then it'll go the wrong way. Multiply by 0.6, you're getting 120,000. That's not the way you want to go. You want to divide by 0.6. So we have the answer on the screen. All of you will have this slide. So if you forget or you're a little squeamish about math, okay, just come to this slide. Say, oh, this person has $200,000. If I divide that by 0.6, I got a $333,000 buyer. Oh, sure thing. So good. Okay. Thank you. I don't know what somebody's going to come to you with. 200, 250. Somebody just came in. Yeah, it shows up here. So fortunately we can get them in. So this is how we take your cash buyers and get you a much bigger paycheck. Okay. Now remember what I said at the beginning. When you say this to somebody, they're going to flip out. They think you're a bad person. And I'd rather tell you that up front than you experience it without me telling you. Okay. Reverse mortgages are bad. Remember that. It's because people don't know how they work. The people who I have done them for, they all love them. And the people I've done them for have come back to me years later and refied them, which by the way, you can do because the market has gone up tremendously, right? So you can get more money out of your house. And what is the mortgage payment? Still zero. Okay. So I have had a fantastic track record with my borrowers. And the reason is very simple. I educate them. Okay. Education is the key. So this is one strategy which you all can use immediately, and there's more coming, that you can start thinking. My $200,000 cash borrower is 333. Okay, now, I think this is yours, Del.
This is me.
Before we go on, there's going to be a test right now. I have $400,000. How much can I get a reverse mortgage for? $400,000. Who's brave enough to answer? 667. Divide by 0.6, divide by 0.6. 666, mark of the beast. There we go. Okay. So, mark of the devil, mark of the beast. All right. Okay. We'll have a conversation about the book of Revelation soon. Okay. So now Dell's going to tell you how you can use this same product to sell your listings faster.
Well, this is right now selling the homes, but this is, yeah. So in this particular case, we're looking at a home, and it's, by the way, it's one of the Beggins listings, and it's showing the listing price for $335. But now you could put this in the hands of a purchaser, and they are only paying $201,000 down and no mortgage payments. Now, which is easier to sell? Something where they're paying $335,000 cash or $201,000. That's a savings of $134,000 that they're going to do whatever they want to with it.
And before Dell moves on, if I'm looking at a $400,000 house, I'm your buyer. $400,000 house is my market. How much cash do I need based on what we've taught you today to buy that house and not have a mortgage payment? 60% rule. Okay. How much cash do I need on a $400,000 house to buy that? So just so no one feels uncomfortable, it's 400,000 times 60%. Did you say 240? 240. This is not rocket science. This is easy, easy, easy. If you're looking at a $400,000 house, you could say to somebody, hey, would you be interested in a program that only requires $240,000 out of pocket?
If you're going to talk, you got to be a little closer.
I keep forgetting. Forgetting. Thank you so much. Yes.
I just have a question. Do you know like how the sellers perceive this if they have multiple offers?
Mhm.
I'm just wondering what the sellers react.
Any financing. Okay. What is a seller's reaction to this? Any financing is negative as compared to a cash purchase, right? But with a reverse mortgage, what is the minimum down payment we're going to put? Most likely 50% minimum. Okay. So now if you come in and I'm putting an offer of 50% and Dell's doing 10% down, which offer is stronger, right? So this is a 50% or more down payment. So a seller could, outside of cash being king, a seller shouldn't have too many issues with that. A good question. So this is such an important slide that Dell is presenting. So I'm going to give you another simple one. It's a $500,000 house. How much cash does the buyer need to buy a $500,000 house with a reverse mortgage purchase and they don't have to make a principal and interest payment. It's a $500,000 house. How much? Chris has already got the answer. 300, 60%. Chances are it's going to be less than that, probably 250. Okay. I keep doing it. Thank you.
Yeah, I know.
Yeah, smack me though. Just not hard. Did you-
just
So since she's asking about financing and how it's perceived, what's your closing timelines? How much time do you need for approval process for that type of money?
Well, Dell and I do pre-approvals on all loans correctly upfront. That's number one, right? We pull credit. We look at income. So when I approve somebody or Dell approves somebody on a pre-qualification, guess what? Chances are they're going through. If we have any doubt on a pre-qualification, doesn't matter if it's this product or any product, we're not ready yet. We have to run automated underwriting. We've got to talk to the lender. We got to do whatever we got to do. How long does it take to do this? 30 to 35 days, Chris, is the answer to your question. How long does it take to close? Okay. Yes.
I was told it was 45 days. So what I did was I had a lot of cash. I was putting half down on the property. The guy said, "Oh, no problem, Terry, you've got great credit, blah, blah." So then he called me and said, "Oh, I hate to tell you, we can't do this because you don't qualify for the insurance on your house, the taxes on your house, the mortgage on your house, the insurance on the new house, and the taxes on the new house." And the processor said, "Well, I'm selling the house, I'm not keeping it." But it had to be closed. You couldn't even have a contract on it. It had to be closed, and I had to wait 45 days after application.
Okay.
So has something changed?
How long does it take to close a reverse mortgage is the question, correct?
Well, from the time of application, they told me it was 45 days.
It's not. Once in a while, we have what's called a second appraisal request, and they could delay it, especially in today's market. Now, if you did this recently, I could see somebody telling you 45 days because it's taking forever to get appraisals. Okay. We've seen appraisals now for 30 days out. Just so you know, in Seattle, they're 60 to 90 and they're $3,000 per appraisal. That's what's going on in Seattle. Yeah. So when people complain to me about a 2-week appraisal, I go, we're fortunate we don't live in Seattle. All right. So to answer your question, in this market, being appraisals are taking 2 weeks, I don't think 45 days is out of the question. I've closed reverse mortgages with 2 appraisals required, which once in a while that happens, in 28 days. That's my record. So I feel very comfortable telling you 30 to 45 days or 30 to 35 days. But in this market, you know what? Appraisals are taking 2 weeks. So if I was
I've even had them take a little bit longer if they're a little bit more rural, because some of the appraisers from the the more metropolitan areas are saying, well, it takes more time, got to take more time to find comps and blah blah blah. But so it can take a little bit longer if the homes are a little bit in a more rural setting.
But there are no specific requirements, like in this case, that would have required it to take that long per a reverse mortgage.
No.
So a reverse mortgage should process and close like any typical mortgage should, take approximately 30 to 40 days.
Yeah, Chris was saying that asking about whether it's the same as any other mortgage, and the answer is yes.
There's probably some personal circumstances that they were stating, or there's certain lenders, like maybe Federal Credit Union will not honor a contract if you send them one that closes shorter than 45 days. They'll basically tell you, take it back and give me the closing day because I can't do it. It might have been something specific like that, not particularly for the type of thing.
And we have, in that, Chris, our rates are generally better than Navy Federal Credit. Our VA rates are usually better and take less time.
Yeah, they're just normal, they're normal loan time frame. Reverse mortgage, they're just telling you 45 days, so it might have been a specific circumstance with that.
Yeah. We've gotten closings as quickly as like less than 15 days on VA mortgages.
But they won't take into consideration if you have a contract on your house and you're closing in 2 weeks. They won't take that into consideration.
Yeah.
I know what you're asking about if your home is under contract. Okay. Like any loan, you have to look at no matter what loan you come to us for, we're going to look at your current situation. If your house is under contract, it doesn't matter until it closes. Your debt ratio includes that. That's a fact. Yeah. And there's no loan that will look the other way.
But you can write her an approval with a condition of the contingency of closing on her home. Give her an approval the same way as a normal one.
Yes, we can give anyone an approval specifying you need to do X, Y, or Z for this approval to be valid. Yes.
Again, probably a specific circumstance with that lender where they would not do that, but in most case scenarios, they should be able to do it like any other contingent, putting it in there as a condition and closing within the same time frame. So it seems to be a specific circumstance for that.
Yes, yes. All the closings are pretty much the same. So let's,
Problem was, I couldn't apply for the loan until my house was closed on.
Yeah, that's got to be done.
No.
Yeah.
That's something that-
yeah, we don't need you to. I'm kind of repeating it and saying it so that for the benefit of the people on the online. But no, you don't need to have your house sold in order to submit an application.
People who are even out of state coming to Florida.
Right. So I'm going to kind of move along, and then maybe if we've got, I think we're probably going to still have a few questions at the end, but let's move along here. So we are trying to make your listings faster by making it easier to buy. So on the next page is a copy of potential marketing flyer that we have been giving to a lot of people. Now, this is what we have been making up, and you can see over here in yellow, those are the senior options. And if you look at the total monthly payment, and we're comparing a $334,000 listing on one of your properties, and it's $334,900, and the total monthly payment, look over here, conventional, VA, FHA, and then look over here, senior options. All they're paying is the CDDs in this case, and our taxes and insurance. Okay, so again, that's got to be very attractive. If you provide one of these flyers to an open house, it's an option that when they look at it, they say, wow, sign me up. So I think it's an option that would be good to show. And then down at the very bottom of these flyers is, as Tom mentioned, we have a video online that they can actually look it up and see what we have available. So we have these available for anybody that wants them. We've been providing them to everybody at Sun City, but we're making them available to all. Okay. So with this, kind of a similar concept is you can use this to win listings. If you've got a seller and everybody else is given the same spiel, but you say, listen, we have more options for our buyers. So if with those options, that's going to increase your the type of buyers that might be interested in your property. So we think that this will also help you with get potential listings. And I'm going to turn this over to you, Don.
On the potential listings, the reason I even put that in there is I was working with an agent. Is the food here, Christy? Chrissy, keep saying, okay. Well, no, because if then everybody want the food, they won't listen to us. That's the reality. Yeah, there you go. That's what they would like. All right. So the reason we talked about using that as a listing tool, which we know everyone loves listings, is I worked with one of the top agents here many years ago. And I won't mention his name. Some of you know him, but he's a very big realtor in this area. And he would go in when he was trying to win a listing, and he would show them, look, you have a $400,000 house, but we have programs that only require $250,000, $300,000 to get your house purchased. So I could have cash buyers now. I have a lot more, a bigger pool, because our cash buyers only need $240,000 or $250,000 house. Everybody else's cash buyers needs $400,000. Okay. So it's really important to understand this is leverage. This is power that you have, but you got to use it. Okay. So this is one of my favorites. Now, we talked about Remind earlier. Okay. If you're not using Remind, you're missing out. Okay. Now I understand everybody's at a different point in life, and some people want to make $100,000, $200,000, $300,000 a year, and some people are just happy with the seller to a year. But you have a tool that if I was you and I wanted to make $100,000 or $200,000 a year, I would use Remind. Why? Because where mine is going to give me all the information I need that is on the screen. Okay. So Chris doesn't look like he's over 55, but I know he is because I talked to him. So a senior owns a condominium. So I know Chris because I go to the gym with Chris. I don't look like I go to the gym with Chris, and I don't, but that's just for fun. But because I know Chris from the gym and I know his house is free and clear, maybe I sold him a house a year or two ago. I don't know. All I know is he's got a condo that's $250,000 and he's over age 55. And I know Chris owns that free and clear. Again, maybe I sold to him. Maybe he's just a friend of mine. We had a conversation, whatever it is. Okay. So I go to Chris and I say, hey, Chris, there's a really nice house for $400,000. It's got a pool. It's got this. Maybe he told me about this. All right. If I could put you in that house, Chris, by just simply selling your house, using the cash that came out of that house and put you in the $400,000 house, would you be interested in that? You won't have any mortgage payment, Chris. He's going to look at me like I got two heads, right? I'm going, no, really, Chris, I can do this. Okay. So what am I going to do? I'm going to list Chris's house for him. And he's going to walk away with about $250,000 after selling costs. So Chris has got a check for $250,000. Now, for those of you who are good with math, come on in. If Chris has $250,000 in hand, regardless of how he got it, what can Chris afford now with no mortgage payment? Mortgage payment is principal and interest. 250 divided by 0.6. Chris can buy a $400,000 house. So I just showed Chris how he could sell his condo. He could buy a $400,000 house. Now, does he have a mortgage payment now? Because it's free and clear. So he doesn't have a mortgage payment now, right? We just said he owns, I didn't say he owns it free and clear, but I think I did. Maybe I did. But Chris owns his house free and clear. Doesn't have a mortgage payment. Does Chris want a mortgage payment? The answer is no. But Chris may want the $400,000 house. He's got a pool. Maybe Chris has kids. He wants his kids to go in a pool. So I'm going to show Chris how he can do this. Now, before I knew that this program existed, how can I get Chris, who doesn't have a mortgage payment and has a free and clear home worth $250,000? Okay. How can I get him into that $400,000? He doesn't want a mortgage payment. But now I can show him. And because I showed Chris, I made a gross commission of $19,500. This is where Remind comes into play. You can find out anybody's loan balance. You know what the houses are worth. That's your business. Okay. You can see their equity position. You can go and take an email list and send it out to people. You have so much power with Remind that it blew me away the first time I saw it. So the math is simple. You list a house. Let's just assume that I'm assuming Chris's house is 250, right? But it could be 450. He just has no mortgage on it, whatever let's say Chris has a house worth 400 or 300 and he owes 50. He still has 250,000. But we're going to assume Chris's house is 250 and he bought a house for 400. That's 650,000. 650,000 times 3% should be $19,500. We created a sale all because we knew what we could do for Chris. Okay. So this is the stuff that we get excited about because we know that if you actually apply this knowledge, you will make more money. Now, this is my favorite one. And this is the downsize or the right size. The reason it's my favorite one is you make the most money and there's no shortage of people that want to downsize a house, especially with this huge, increase in the market, right? So I'm going to pick somebody else. I don't know anybody else's name here other than Chris and Dell and Phil. Who else wants to be? Oh, I didn't see you over there. You're too young for this. Sarah, I'm going to say Sarah. Sarah's 55 years old. Sarah's not 55 years old. Okay. But Sarah has this big, beautiful house. It's worth about $550,000. Sarah is a lot older than she looks. She's like 61 because I know that too, because I talked to her. And I know Sarah, she's got $515,000 of equity in this after closing costs. How do I know that? I'm a realtor. I can do a net sheet, all that stuff. So I go to Sarah and I say, hey, Sarah, it's just you in that big house. How about if I showed you a way to put $335,000 in your pocket and then maybe right size into a different home? She's an empty nester now. Her kids are gone. She doesn't need this big house, but I'm going to show her how to put $335,000 in her pocket and still have a mortgage-free lifestyle. Why wouldn't she at least entertain that conversation? Why wouldn't you open that conversation with somebody? I can put $335,000 in her pocket, put her in a home that's right size for her at this point in her life. Okay. And I can make a lot of money in the process. Okay. Notice I'm talking to you guys. I wouldn't tell a buyer this. Okay. But if I list her $550,000 house and then I put her in a home for, where is it, Dale? 300? Thank you. A $300,000 house. I just sold a lot of real estate and I made $25,000 in gross commissions. and she still has no mortgage payment. She has $335,000 in her piggy bank that she didn't have before. She had all this equity, but what would she want if she was 62? Does she care about equity? No, she cares about having a nice lifestyle. She has a big chunk of money in the bank now, and she has a house that's right for her. Okay. This is something I'm glossing over, but let me just tell you, if you could do one of these a year, you'd make a lot of money. This is what I would be doing if I was a real estate agent. Okay. I'm going to just blow by that because we're going a little bit longer than this one is what we call the duplex strategy. I'm going to do this one quick so we can wrap this up. All right. This is mine, Dale.
Yes.
Okay. Duplex strategy. All right. So somebody comes into town. They're from up north, and they say, well, I'm thinking about buying a duplex. They're 62. They're 55. They're 57. They're younger, like Dell. Okay. They're younger. And you talk to them and you find out maybe they did some real estate in the past where they were landlords. Thank you. There we go. Landlords. And you realize that this program exists, and they look at these villas. So it's a new duplex or a villa. It's $300,000 per side or $600,000 for both. If it's $600,000 for both, how much cash do they need under the reverse mortgage purchase to buy both of them? 600 times 60% is 360. Well, if they spent 360, they could own both of those villas, live in one, and rent out the other. And how much is the mortgage payment on that? Anybody? 0. Thank you. There's no mortgage payment on either side because it's a reverse mortgage loan. There's no mortgage payment. So somebody could come into town who maybe wants to buy a villa, okay, and you sell them both villas, tell them they can rent the other one out. That's a great strategy for probably a younger, a 58 or 59 or 60-year-old person, okay, not your 90-year-old person who comes into town, okay? So, and if you were able to do that again at the bottom, you just made an extra 7,200 in commissions. We won't go through all the numbers, just to show you. There's all kinds of ways to slice the pie on this. Okay. And again, you'll get this. This is even online. Okay. This one, Dell, you're going to talk about, and we're almost done.
Yes. Okay. So we did just talk just real briefly that this can also be used as a reverse finance that we can do reverse refinances. If you have that person that they feel like they can only get a piece of property if they put down all cash, as opposed to the 50% cash. If you feel that the seller will only entertain an all cash offer, you can still tell them, well, listen, we'll do the all cash offer, but we have someone in our office that can refinance after the closing. So then they can still pull that money out after the fact and have no mortgage payments. So it's another option for you guys in your toolbox. So they can pull out that 40%, and that is, as Tom mentioned, could be 50% or a little bit more depending on the situations, but it is another option. And let them enjoy their retirement. So I think the rest of this is yours.
Yeah, and we're just going to wrap up now because it's almost 12 o'clock. We told Chris this would probably be about 45 minutes. I think we did anyway. And then we got lots of food. So we got lots of food here. So everybody help themselves. That's going to be coming in here. Okay. So there's all kinds of benefits. I just want you to know that this presentation is online. It's all recorded for you, the real estate professional. There's one for the buyers. There's one for the real estate professionals. Okay. Dell's number and my number is at the bottom of every one of these slides. We will furnish Chris with the PDF version of this. He can get it out to all of you. If you have any questions, you can look at any slide, my number and Dell's number. You can call either one of us and we can direct you. So if you want to hear us talk again, like this, you want to get to sleep at night or something like that, or this was just a lot, there's another presentation. Same thing. It's going to look a little different because it's my older one. Okay. But it goes through all the same strategies. So if you hear them again, okay, but you can call us at any time. We're available 7 days a week for regular loans. These loans, we do them all. And if you have questions, we're there to answer them. If you have buyers that are interested in something like this, we're there to pre-qualify. Okay. And so just to wrap it up, because it's right around 12 o'clock, what is the only thing you need to remember about this whole presentation? What do you need to, what would be your role in getting a buyer to learn about this? I'm going to just blow through this here. is to get them to the link that Dell showed you on the page. Okay. So if you didn't grasp any of this, or it was just a lot, and there is a lot here. Okay. This is, again, Chris will be happy to give this to anybody, Chris. Right now, we've been doing it for the Sun City Center agents because we're here out of this office, but we can do it for all the Apollo Beach agents. It's right down here, right at the bottom. Say it again.
That would say 65 on their page.
Down at the bottom. Oh, the reverse mortgage purchase option assumes a 65-year-old borrower. That's not, but that's because, okay, we're just putting a scenario in place so we know how much to use as a down payment. It's not the requirement, but good. 55 is the requirement.
Good catch.
Good catch. But that is just the scenario, because every one of these, Dell and I have to look up a scenario for. Okay, 55. But that's the only thing you really need to remember is, and you guys can all go down here and look at this and see what a buyer is going to see. All right. So if this was overwhelming, because I've done this a lot of times and people say, oh, that's too much. Number one, you can review it. Number two, Chris is going to send you the PDF of it. And number three, if you want to see what your buyers would see, you'll see that's a no sales pitch. We don't do any sales pitching. We don't talk to them about you guys making more money. We just talk to them how it helps them. Okay. Yes, Sarah. Yes. We'll fix that. Okay. Sarah said our link has 62 and over. Yeah, they just now came out and changed it. It's a different program. Yeah. Okay. So we're going to be here for lunch. So you guys can pick our brains. We don't want to hold anybody longer than an hour. So, but our information is there. Don't hesitate to call us, email us, anything. We threw a lot at you today, but we hope we've given you something that you say, hey, I know this person this might work for this person. Okay.
The loan requirements though are pretty much the same as a normal mortgage, other than the age requirement and
Pretty much, yes.
And no FICO
as far as
score.
paperwork. is
No
concerned.
FICO.
Yes.
That's a big
Yeah.
thing.
Yeah. They have a residual income calculation versus debt to income. And a number of years ago, they put a few more rules in because, again, like any good thing, people ruin it, and so they had to put a little more, tighten it a little bit. But I've yet to find one person in 7 years that's come to me that hasn't qualified for this, because guess what? You don't have a principal interest payment in your qualification. So all of a sudden, things become wide open. I've refinanced people, ready for this, that make $1,300 a month in Social Security. That's all they made. And they had a car payment. And we're still able to do it for them. So yeah, it's amazing what this can do. It's amazing.
It is something, maybe it's a different product because of what I heard before and met people, as a divorce or a mortgage, but they actually have some payments from the
Mhm.
lender.
Yeah.
Versus
Yep.
zero.
It's the same program. We didn't get into the refinance side because our goal today was to give you as agents a tool to market and to go and say, okay, this person's got $200,000 in cash, but now I can sell them home for 333,000, I think is the number if I divide by 0.6. Okay. So
Maybe next question of the buyers, like, hold on a second, I don't pay anything, but I heard reverse is
Mhm.
giving me something.
see that link at the bottom? We've got these two guys in our office. They seem like really nice guys, but I can't explain it as well as them. But they put this link out there for you, the sarasotamortgage.com/C21 reverse. It's all right there. Their information is on the page. I'm the realtor. They're the mortgage guys. Let them explain. We do the explaining, not you. Okay. Any other questions?
Is there a prepayment penalty?
No. No prepayment penalty is a question. Sorry. Any hard questions? You guys are throwing us softballs. Yes, Sarah, I'm expecting a hard question from you.
Not hard, I probably that's
Mhm. Okay. On the villa scenario, okay. First of all, it's always a primary residence, and you can't have an existing reverse mortgage in process. Or in other words, you can't have a reverse mortgage. If you just closed one and you want to do another one, that's fine. You're allowed to have one reverse mortgage at a time.
But if it's a villa, those are two separate parcels.
Mhm.
But they'd be able to buy both with the reverse
Mhm.
mortgage. even though
Yeah.
you can only-
Yeah.
it has to be a primary residence.
Yes. Yeah. You can't ever do investments, but as long as you live on one side, you can rent out the other one.
Even if they're two separate, like a duplex is all one, usually one unit.
Duplex.
one parcel,
Sorry,
it's all one,
duplex.
but if it's a villa,
It's one unit, Chris. Thank you for clarifying. Yes. Yeah. Thank you very much. If we said villa, we mean duplex. Yeah. Yes. But that's good for everybody online. Chris is clarifying. It's a duplex, not a villa, where they can buy one side of it and rent out the other one, as long as they live in one side as their primary. Thank you, Chris. Okay. Yep. Can be new construction. Well, it doesn't have to be built. Okay. We can do an end loan on new construction through the HECM for purchase. So in other words, if you have somebody and it's going to take them 6 months to build a house, as long as the builder will do the financing, and we can come in at the end, yes, we get a CO and we're good to go. It's just like any other house. I actually did one on new construction for one of the agents in this office who shall remain nameless due to confidentiality.
30-second pitch to explain a reverse, but like layman's term, quick 30-second pitch you would use to explain a reverse mortgage to a buyer and agent to keep their interest spark to get them to the next step.
Well, that's a really good question, Chris. I think the best way I can answer that is I need to know the scenario. Okay. Chris, if I could show you a house for $500,000 that only required 5 times 6, $300,000 of your cash with no mortgage payments, would you be interested? That would be how I would. Yeah.
What would you use to somebody to say, you probably wouldn't even use reverse mortgage in your question there. It's really, the pitch is really, you're a cash buyer with that much money. What if I showed you how you can keep some cash in your pocket and still buy the same value of home? Would that be something that would interest you? Let's have some conversation.
Yeah, and we're happy to even do a role play with people. You guys could call us up. We're willing to do anything to help you get more business, because that's what we're about. Okay, we're not just about, we don't have our hand out as loan officers. Hey, please send me business. No, we want to be a team. We want to help you get more business and do whatever it takes to make sure you're successful, because long term, that's going to help us. And so, Chris, to your point, that's in here too. All I'd have to do is find it. Client name, Chris, the home you want's about $400,000. If I could show you that for $240,000, would you be interested? There's no mortgage payments with this program. Okay. Or we have guys in our office who can explain how you can do this, without having to make a mortgage payment. Is that something you'd be interested in? And if they say, and invariably they will say, what is it? How do you work? I really don't know. That's not my bailiwick, but the loan officers will explain it. If you don't want to talk to them, I understand that till you're ready. But then all you have to do is send them to the link. Like I said, we've done all the work for you. All right. And I can tell you that 99 out of 100 agents I present this to don't use it. I've been doing this a long time. They don't use it. And the reason they don't use it is the second somebody turns them down or looks at them like they got horns, okay, they never mention it again. If that's you, you got to have tough, thick skin. We're all in sales. So one no does not mean the next one's going to be a no. So, because if you guys don't use it, Del and I are getting our real estate licenses. We're coming up here. Okay. We're going to just take over the town. All right. Chris will be like, okay, I signed up with me. All right. Who wants us on our team? So yeah, we went a little longer, but we did have a Q&A in the middle. So we apologize for going over 8 minutes, but we got plenty of food. Please enjoy it. Thank you all for coming here in person. Yeah. Okay, Chris, do you want to close this out? Okay.
We're shutting it down. Go ahead and ask some questions, because that's what everybody likes to do anyway. If you have any questions, I'm going to send this out in a video form. And so I'll send a video out along with the PDF attachment there. So you'll have that along with both Tom and Dell's contact information. So if you have questions, feel free to reach directly out to them, and then pay attention for the email as it comes out with this attached. So if you guys need anything else, keep us posted. Have a great day.